Q1 is coming to a close, and what's in the markets is nothing short of incredible. We're going to take a look at it. I am Dr. Stock, Doctor of Education, and if you want to know what kind of snake will help you clean up around the office, it's the window viper. All right, we're going to take a look through the indices. SPY tracking the S&P 500, QQQ tracking the NASDAQ 100, and IWM tracking the Russell 2000, which I've been covering for quite a while now. And let me just put the charts up here. So for the S&P, as we have here, mind you, there's some stocks I want to cover too. NVDA, AMD, Tesla, Unity Software, Enphase, and Netflix. Each of those, I think, have been some interesting charts. We'll get to those as well. So here we're looking at SPY, still in the rising wedge pattern, doing all right in the pre-market hours as we look at it today. So what we're looking at, 523, pretty darn close to this this previous close that we had closed yesterday at 523. So we're just a few pennies shy of that right now. So we want to be watching for this. Will we break this previous high that we had back over here on Thursday of last week? Or are we going to hit resistance and sell off? We're going to have to look at that. Like I said, it is the last trading day of the quarter, and then we will see when the stock market opens on Monday how that pans out for us. And then that is April Fool's Day, by the way. And then we have April 2nd, my oldest daughter's birthday, coming up with Tesla deliveries. So that's also going to be important for us to watch. So moving over from there, over to the Qs, we've exited the rising wedge pattern, and now it's all about putting in higher highs. If we're going to put in a higher high, good, we can probably travel up. We did retest the bottom of the rising wedge, and then we sold off a little bit. It's actually mostly sideways from where we're at right now. We would be watching this kind of beige line that we have right through here for the Bollinger Bands. That's the 20-day moving average. Breaking down below that, a 2-candle close below that could confirm the fall from there. So we'll be just watchful for that. It is possible that we do push higher, and if we do push higher, that can leave us going higher for a little longer. Just need to be watchful of it. I'll cover some of the big tech in this video as well. Moving over to IWM, tracking the Russell 2000. Watching this strength come in, I was looking all the way back at the inverse head and shoulders that we had down here, and that was around that 160, 170 range. And I said that this is getting to be the time where we're going to see those small caps come in because they're getting to be pretty well sold off, and so the value really came back to them. And you can see we rose up all the way to about 205, sold back down to about 185-ish, and then since then we've had another run, and we're trying to fill this rising wedge pattern out that we have here too. And so I don't know that the pain is necessarily over for IWM, for the small caps that are out there, but I do believe that this is going to be a huge value opportunity, and then this is one that can absolutely have a chance to outperform some of what we've seen versus like QQQ over the next quarter or two. So we're going to have to watch for that. Really, rate cuts are going to be one of those things, and the market's going to price in the anticipation of those rate cuts before they actually happen. So even though the Fed right now is talking about not cutting as much or taking a little bit longer to do it, the market's still going to sniff that out, and they're going to start pricing things in ahead of time. And so we'll see what happens with that when we do, and we'll be watching for that. Now, mind you, this could be bearish for us if we break down through the bottom of the trend line, much like what I said for SPY and QQQ. I will say, as far as the relative strength index goes, the RSI, that so far we're still in bullish territory and climbing, and that's different than what we saw with QQQ, which has sort of had a bit of a bearish divergence for a little while yet, bounced off the 50, and now we're still in bullish territory. We are down here at that 50. We're going to have to see if that starts climbing again on us or not. SPY, we still have that bearish divergence happening here, not necessarily down as close to 50 where I think that we're going to start reversing yet, but we do want to be watchful for the momentum in this as well. NVIDIA, which my chart froze on my last video that I posted here to YouTube, you can see we just smooched that 20-day moving average that I was talking about with SPY, QQQ. We also had it back here, and that led to a significant bump up in price. So in the pre-market hours, we're trading right around the close yesterday, which was around at $900 per share. It is possible that that still holds as support for us, depending on how we open today and depending on where we end up closing for the day. I will say, if we look on a 3-month basis at the sort of trip that NVIDIA has been on. So this past quarter, they put on 82% of their value. And if we look back to the first quarter of last year, that was 90%. So this has been absolutely incredible for 149, going all the way up to over $900 per share. As a matter of fact, getting closer to $1,000 per share by the high for NVIDIA. So we could possibly see some settling come back to NVIDIA stock. We're going to have to watch for it. Look at the 4-hour chart that we have here that you can see over the past few hours, we've just been riding right along that $900 line. If we break down, we could break down to as low as $850, and then we could probably find some decent support there. If that support does hold, you can see that we could have a decent bounce coming off of that, maybe sending us back up to retest that 900 line. If that support breaks, we have room down to about 800. And I think that this is one of those coiled spring things that as we start to push down and get pressure on NVIDIA, that we start to see some pain in the market, some doubt in the markets, maybe some doubt about the pricing of some of the AI plays that are out there. And I don't know that we push that spring down too far for NVIDIA. I think there's some relative safety as we watch that price drop that we're going to have a really strong recovery. I think that there's still a 4-figure price tag on NVIDIA that we're going to be chasing after that $1,000 mark, and it's not going to be given up on until we at least hit that, and we'll see if that happens between now and their next earnings report. So moving over to AMD, this one sold off considerably. We are flirting with the 50-day EMA and SMA in blue that we have here. Let me stretch that out for you so you can see them, and you can see just fighting over, and we have buyers coming in the low to mid 170s. That's why we keep on getting these bottom wicks. That's where we got this big strong candle here, and up above the 50 EMA, good. We need to really open today and end up passing over that 50-day to have further upside on this. Rejection off of that could send us down lower, especially if we start to get this EMA cross from the 5 or the 13 down over that 50. So the 5 over the 50, not great for seeing AMD's price appreciate. And then the 13 crossing over the 50 can certainly be a much stronger downward catalyst. So we wouldn't be watching to see which side of the 50 the price action goes to. We want to see that 50-day beat and gone up over. And when we look at the RSI for AMD, it is kind of inching back around, but we need to see what happens if it makes it back up to 50 for RSI and then crosses it. That cross over 50 for the RSI as well, not to be confused with the 50-period simple moving average or the exponential moving average, but at that crossover of 50 could be signs of further bullishness. So we could have some value still left in AMD. I think it will sell in sympathy with NVIDIA. If NVIDIA sells, I think it will rise in sympathy with NVIDIA if NVIDIA rises. Over to Tesla. We have a little inverse head and shoulders going on with Tesla, so we want to be watchful for this. My goodness, keep on drawing on my charts. There we go. So for Tesla, we want to be watching this. We really need to break over 180 solidly, and after that 185 to have further upside from that. If we're able to overtake 180 and 185, which is about where we can argue that the neckline is somewhere in that range for this, as low as 180, as high as 185 till we're out of the weeds with this, then this is one for this descending triangle pattern that we could actually have that price appreciate, that we start to take on the 50s, which are around 190 per share when we look at the moving averages that we have right here, and then possibly potentially opening up the way to that $200 price tag again, and look for a significant rejection if we end up there. Now, mind you, it is possible that we fall back into this range that we have in here and we sell off, and then we have 2 different trend lines down here for support that we could count on with that confluence to be solid support for us. So moving over to Unity Software, at the bottom of the trading range, we find that buyers come in right around that $25 to $26 mark. And so for this one, long bottom wick yesterday, and I dollar cost average a little bit more into this range to take advantage of a swing position on this one, and also took out another call option play. So we'll see if that plays out handsomely for us for Unity Software. Enphase, I've had this watched for a while, and right now we're coming off the bottom of this trend line for this ascending triangle pattern. This can be a bullish reversal pattern for us. We're over the 50 SMA, and then the 200 is just above that at about 125. So we need to be able to take that. We've tried it. We tested it out once, twice. Now we're after a third retest, and breaking that this time could lead to a golden cross moment and provide significant upside for Enphase. It will move with solar stocks in general, and they are interest rate sensitive. So if we see bond yields start to come down, interest rates start to come down, the cuts start to be anticipated from the Fed, then I think that we're going to get some outperformance with Enphase over the next quarter to 2 quarters. So we're going to have to be watching for that. Now let me wrap things up here with Netflix. With Netflix, we've had this broadening wedge pattern happening in purple, and then more recently we've had an ascending wedge pattern that we have right here. And in this ascending wedge pattern, we finally broke down through the bottom trend line. Now, mind you, not fully confirmed yet, but that goes along with the bearish divergence that we're seeing. If we come back and retest that and get rejected, we could see a further sell down to the 50 EMA and SMA off that one. If we make it back up into the trend, then we have some room more to the upside on this one. The price tag is going up to as high as $740 per share for Netflix. So I think that a lot of hedge funds and institutions are going to be looking for where they can see that outperformance take place. So we're going to have to be watching for that. So let me wrap it up this way. If you guys want to see what I'm buying and selling, check out the link down in the description for the Patreon. Also, if you learn to do technical analysis like I do, that link is also down in the description as well. I thank you guys for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.